Joining us right now to talk about this and maybe who's going to get the top job, Peter Boockvar, Chief Investment Officer at OnePoint BFG Wealth Partners and a CNBC contributor. Peter, good morning to you. What do you think of the idea that too many of the folks who are governors of the Fed or the presidents of different Federal Reserve boards are celebrities? They shouldn't be talking. We should move back into the Alan Greenspan era.
Well, on one hand, I'm full agreement with Scott in the sense of the Fed has become this very activist institution over the past 25, 30 years. But on the other hand, if they are going to be in the business of price fixing the cost of money, you do want to hear what they're thinking ahead of each of these meetings. It's a very delicate balance that central bankers have to deal with inflation and the jobs market on either side, sometimes conflicting when it comes to dictating policy.
So when you think about what Secretary Bessent said in terms of what he wants from the Fed going forward, and you think about the potential nominees that we could hear about to run the Fed, a lot of talk about Kevin Hassett. Does Kevin Hassett fit that mold to you?
There's an inherent contradiction here. I agree again with Bessent that we want a Fed that's in the background. But on the other hand, Stephen Myron, who was the appointee of the president, he wanted to cut interest rates by 150 basis points over 3 meetings. That's a highly activist Fed. So there's not clear messaging here. I think the bottom line with central banking is the interest rates should be above the rate of inflation. We should read the room right now. The room is filled with a lot of people that have suffered through 5 years of very sharp rise in inflation and their cost of living. Small, medium-sized businesses that have dealt with very intense cost pressures. So I understand that the labor market is weakening. We want to cut rates to alleviate that. But I think that the inflation is the disease. A softer labor market is more the symptom of that.
So you say don't touch a thing. Would you raise interest rates?
I grant maybe the Fed can cut one more time. But if inflation's going to still remain around 2.75% to 3%, the Fed funds rate should be above that. And if they're going to cut 25 basis points in December, you're talking about a real rate that is only 50 to 60 basis points. I don't think it should be going any more lower than that unless the inflation rate takes a leg lower. If it does, maybe it gives room to the Fed. But I don't think the Fed, they don't have a crystal ball that's any greater than the rest of us. So take this meeting by meeting and still keep the Fed funds rate above the rate of inflation. Because if they do not, well, then the long end is going to speak up and long rates are going to go higher. The dollar is going to weaken, and then we're going to have an inflation problem all over again.
Hey, Peter, the word yesterday is that it looks like Kevin Hassett is most likely going to, or he's in the lead at least right now, for the president's choice to replace Jay Powell as Fed chairman. If that happens, and if what Treasury Secretary Bessent was telling us yesterday, if they are able to go after the structure of the Fed somehow. I mean, he brought up ideas of things like the Fed presidents didn't always make sense because they were coming from New York. They were New York bankers put in other places, which I don't know how much of that is actually true and how much they go after this. Is there a point where the market would say, wait a second, we want an independent Fed and this is too much?
Well, I think that will be reflected in the long end of the yield curve and the dollar. If they don't like the path that the Fed has gone down, I think it'll be reflected in higher rates and a lower dollar. I think Kevin Hassett and I think the other 4 candidates are highly qualified for this job. I just think that they need to be careful with just coming in and slashing interest rates and thinking that's going to be the cure to our ills. I mean, easy money has led to 30 years of booms and busts and doesn't necessarily lead to faster economic growth. We've seen it here. We had 7 years of zero interest rates, but we had a pretty lame recovery after the great financial crisis. Japan, Europe, they've all experimented with easy money, and it doesn't necessarily lead to faster growth. Right now, the biggest issue, I believe, for both consumers and consumers and businesses is sticky inflation. And rate of change is slowing, but the absolute level still remains very high over the past 5 years. And that's what we should be dealing with, because if we can deal with that, well, then a healthier economy and stronger job growth can come from that.
I want to go back, though, to the parlor game. Who should run the Fed? Given everything you know, who should run the Fed?
If I had to choose, I would say Waller or Bowman. They're on the Fed. I think they're seasoned professionals in that job. I'd be happy with each. But like I said, all five are highly qualified candidates, and I'd be fine with each of them as long as they stick to an independent mind of theirs.